Good day, fellow investors. BYD stock is a buy now, and a strong buy if compared to Tesla. BYD, the Chinese car maker, recently overtakes Tesla as the world's most popular EV maker. And we're going to do a business analysis, look at the financials, the fundamentals, the valuation, and come with a risk and reward that is positive investing conclusion. And if we look at BYD, that's traded on the Hong Kong Stock Exchange or as BYDDF at the US Stock Exchange, and the stock is down a little bit from the peaks but not crashing as many other stocks related to the EV sector have done in the past. The P ratio is pretty low, the forward one is 15.5, there is a dividend, and the market capitalization is 78 billion. Of course, the stock enjoyed a boom during the start of the EV boom, early 2020s, and since then it has been flat, but the business did grow, so there might be an opportunity going forward, especially if the business continues to grow. During my research process, I looked at all the articles on Seeking Alpha, because if you read them all, you find here and there little pieces of information that put a good conclusion to the puzzle. And as you can see on Seeking Alpha, everyone has BYD as a buy or even a strong buy. The stock is a little bit down, thus compared to the highs of 300, we are now 30-something% down. Therefore, you can take advantage of that decline, and especially it looks cheap if you compare to Tesla, as BYD has the same profits, is growing faster, makes more cars, but the market capitalization is 1/8, 1/10 of Tesla. So let's look at the business. Of course, it makes EV and plug-in hybrids, and the key there is the huge growth achieved during the 9 months of last year that we have the data, 62%. And if they just keep growing, not at that rate, but even at a slower rate, this should be a good investment given the price-earnings ratio. By the way, if you're looking for good investments, if you like my style of doing research, please check my stock market research platform, where there is my portfolios and many covered stocks that I do the research, cover over time, and now it's a great time to join because we have 4 strong buys that are even lower than the average price I paid for. And also, I'm going to update on each of these covered stocks in detail as the new annual reports come in. So it's a great time to join and start following the companies. And also, if those fit your portfolio, buy them at a low price, lower than what I paid for. Continuing with BYD, they are investing also overseas, and about 1/10 of their units now is sold overseas. But if we look deeper into the business, they have a handset assembly business, but that makes just 20% now, as the focus is all on automotive and related, especially batteries, where they make 80% of their revenues. And the key here to know is that their EV share of the Chinese market increased to a staggering 33.5%. Their brands are BYD, Denza, Yangwang, and Fangchengbao, if I said that correctly. But the story is simple. They are now selling more electric vehicles than Tesla, plus the hybrids that are not calculated here. And as this Bloomberg article says, it's not just Tesla that's their competitor, but they are eyeing the whole car industry. And they have their robotized production. I remember just a few years ago when Tesla was introducing this, and then everybody said this is a huge competitive advantage, but then I said everyone will do the same over time, and you can see here with BYD, but they are integrating everything. They are buying ships, chartering ships to ship those EVs across the world, and given that battery production also, they can have products at lower prices than Tesla. So they have also some more expensive, but the most of the sales are much cheaper when you look at entry price compared to Tesla's models. And as I said, they are expanding globally. This was the Munich show last year. They are going to the Euro 2024 as a sponsor. If you remember 2002, Hyundai came out of the blue sponsoring the Japanese Soccer World Cup. That did well as they became a stable position in the global auto market. And they hope that they will grow this further over time thanks to their building competitive advantage that we'll later discuss in the margins. And as they own their battery supply chain, they focus on cheaper cells and abundant iron ore phosphate instead of cobalt and nickel, and they manage to lift margins and be competitive. Plus, we discussed recently the lithium sector, the supply and demand there, and as lithium prices went high, new technologies have been developed, and that are sodium-ion batteries that BYD is investing now into a new plant, uses less lithium, which then again changes the supply and demand situation for the lithium video that you can check here on YouTube. And this is very interesting how they became the best-selling car mark in China, had some sales, but then really boomed on that EV explosion. Now, huge growth, let's talk valuation. It's not as expensive as one would expect for such a growth company. You can see here that the operating income is closing in on Tesla's, so 2 billion. Tesla has declined a little bit, they have done more, but the current last 12 month BYD is already at 4 billion. And they have industry beating returns on equity, which means that their integrated production is doing well. The net income for the last 12 months is $4 billion compared to the market cap, and likely will continue to grow. The key here are margins, gross margins between 16 and 20%. Gross margins for car makers in good times are usually between 8 and 12%, which leads to good operating income, growth, net income, and profitability. And if they can continue growing and increase their sales globally, this could double in production, and then you have a double in profitability. And if you have an 8 billion net profit in the next 2 years as they are going, then you have a market cap of 80 billion, which is then just a P/E ratio of 10 for a growth company. And if they keep growing, the market cap will follow net profits. So this is in short about the company. Let's discuss now the risk and reward. And start with Warren Buffett that sold most of his stake. They bought this a long time ago, 20% stake for 200 million, which is one of the best investments Buffett and Munger did. But Munger warned the CEO of BYD not to enter the challenging automobile business. They didn't listen, and the rest is history. But Berkshire has been selling. This is October 2023, May 2023, and selling and selling. And you can see here how over 2022 they started selling. If you compare this with the stock price, as soon as the stock price hit exuberant levels, Buffett started chopping his position. But still, the reward, if they are arriving in the US, already expanding in Europe, Latin America, etc., they are growing faster than Tesla, the P ratio is low, they don't have any debt. Of course, there is China risk, but let's hope for the sake of humanity that doesn't materialize, and therefore you have a very interesting growth company in a hot sector that is relatively cheaply priced. If they just keep growing, the stock can then continue and double if the growth trajectory is still there. And that is the risk and reward. We have seen how the market, let's say, thinks it is a strong buy, where the stock is down because of everyone selling Asian stocks. But given the global footprint that they want to take, if they make it, then now is the time to buy this dip. So if you enjoyed this Now is the time to stop watching. Now we go to value investing perspective. Warren Buffett is selling, thus this is not a value investment anymore. It is a positive risk and reward investment, but not that much as a certainty value investment. This is because this is still the automotive industry, extremely high competition, and every one of these guys will be after BYD. And then also China did grow really significantly, especially on that global EV demand, but everyone will try to cater to that growth. And yes, car sales have rebounded in China, but I don't expect that it will continue to grow. It's more likely it will stabilize over time. Thus, China less growth and growing overseas, yes, given the competitive production advantages, they can, but there are always taxes to think about. But for now, given the entry prices, the competition, okay, but all these brands are always finding a difficult time entering. Yes, they enter the European market, but then really getting some share there becomes very, very difficult, especially in the US. People are not excited to buy Chinese cars, even if what the Toyota Prius or Corolla is the most sold car. So if BYD can follow into Toyota's footstep and have their cars to be the most sold globally over time, then there is plenty of room to run. But if that doesn't happen, then it simply isn't a risk value investors, Warren Buffett, likes to take. Thanks for watching. For value investments, check my research platform. I'll see you in the next video.